people, what's going on? How are you? Hope all is well with you and yours. Everything is awesome with me and mine. And it is time for day 13. Day 13 of our 50 terms in 50 days. What's going on, Belle? Thank you for joining us on our top 50 real estate terms in 50 days. So, I always try to give you a little background about what's going on. So today was supposed to be a chill Sunday, right? It's Sunday. Everybody needs, really, today is really the first day of the week. Today is really the first day of the week. That's why you get your prayer on, you cook and do all those things. It's the first day of the week. I was trying to chill today. It was all good until about 5 o'clock, right? And then at 5 o'clock, all hell broke loose. I thought I was going to have a chill day. And then I got word that I needed to do this contract. I had a deadline. I was supposed to meet up with a friend. It didn't happen. Things just went kind of a little bonkers. But it's all good because I am blessed, highly favored, booked, and busy. Anyway, day 13 of our 50 terms in 50 days. So can I get a drum roll, please? Can someone please put some drums down in the comment section? Thank you for the hearts. Drum roll, please. Today's word is pre-approval. Our favorite word in real estate. Our absolute favorite word in real estate. So just to give you a little bit of background on me so that you know that I know what I'm doing. My name is Malika Jackson, team lead of the Jackson team, powered by Bennett Realty Solutions. How are you? Thank you for joining us. Been doing this 15 years in DC and Maryland, and I have a gift and a goal, which is helping people tap into wealth through real estate. That's what I do. That's what I'll be doing until the day the good Lord calls me home. So I have a degree in business and a degree in information systems. And I've helped hundreds of families achieve their real estate goals over my 15-year career. So that's what I'm here for. That's what I do. All right, so let's get into it. So the pre-approval, that is the golden ticket. If you're going to do anything in terms of purchasing in real estate, you need a pre-approval letter. You can't do anything without the pre-approval letter. And my whole purpose for doing these 50 terms in 50 days is to educate people because, like I always say, I find that this time of year, people have very lofty goals. People have big goals. They want to do things by the end of the year. They want to do things in the new year. And I'm just here to provide the information to make it a little easier for you. That's part of what I do. Inspire, educate, help, give. That's what I want to spend the rest of my life doing. So let's talk about the pre-approval. Let's talk about what it is, what you need to get it, and where you get it from, right? So your pre-approval letter is basically a letter from a lending institution that says that you are approved to borrow money. It's the letter that you need that says, yes, this person has met the financial, credit, qualifications. We trust them enough to loan them money. So you need that letter before you can go look at a house. And I get calls all the time. People say, hey, Malika, I want to see this house. I saw this house. I love it. I want to see this house. Fine. But there's a procedure that we have to go through. You can't just go out and look at houses. Well, we can, but that's really not the way we do it. There's a procedure. You have a consultation first. Then you get a pre-approval letter. Then you go out and look at houses. And there's a reason why. Because if we just go out looking at houses, we don't know if we're looking at the right thing. Right? And so we need to know how much you're approved for. We need to know what type of loan you're going to be getting. And we realtors, agents, we match up the information on your approval letter with the houses that we're going to go see to make sure that what you're looking at, you can actually buy. Because you might have one of two lending types. You might have an FHA loan, which requires a certain type of property, or you might have a conventional loan, which requires a certain type of property. And people with different credit profiles, different savings amounts, get different type of loans. So if you're a very, very strong buyer, you have a great credit score, you have a lot of money to put down, you can get a conventional loan, which will give you a better interest rate because you've proved to the bank that you're credit worthy, and you can get a property you can be very flexible on condition. They're not going to be so picky on the condition because they know that you probably have the money to fix it up. They know you're putting a lot of money down. You're serious. You're going to take care of this property because you're invested. You have skin in the game, as they call it, as opposed to maybe a first-time buyer or someone who may not be as financially secure, but they're doing well enough to qualify. Maybe they don't have as much money down, but they have enough to meet that 3.5% down payment. Maybe they don't have an 800 credit score, but they have a 650. They've been paying bills, on time. Maybe they just haven't gotten to American Express level, like we need to get those good scores, but they're doing okay. They would get an FHA loan. However, if you get an FHA loan, you have some restrictions. The interest rate may be a little bit higher because the bank knows that you're right there. So they take on a little bit more risk. You get charged for that. Also, that property is going to have to be in great shape because they do not want the house to have any problems, because they figure, okay, well, if something breaks, can they pay for it? If this house starts to go downhill, are they going to be able to fix it and protect our investment? So circling back to the pre-approval letter, you're going to probably have one of those two loan types on your pre-approval form, and we need to know that. So that's why you have to get the pre-approval first before we go looking at houses. So where do you get it from? Any lending institution. You can go to a bank, credit union. You know, most people have credit unions with their jobs. You can go there. The interest rates are great. You can go to a bank, whoever you bank with here. You can find an online bank. There's mortgage brokers. Anybody who lends money, you can get a pre-approval letter from. They take about 24 to 48 hours to do. The lender is going to ask you for a lot of information. So I always tell my buyers, lenders are going to dig all into your business, right? Do not be afraid to give them that information. Lenders ask questions that we as agents cannot even ask. So when they start asking for your social security number, when they start asking for your income, how much you make, how much you have in the bank, how many accounts you have, they'll get all into your personal business. And I run into buyers sometimes, it's like, and they'll say, oh, they asked me for a lot of personal information. Yes, because they're about to loan you $300,000, $500,000. Yes, they're going to get into your personal information. However, they are the only ones licensed to do that. We as agents, we negotiate, we write contracts, we set up tours, we, tour properties, we do that kind of thing. We only know how financially savvy you are when we get that approval letter, and we need to know how much money you're putting down, because we write all that in the contract. We don't get into combing through the credit and doing all those things. I have someone on my team that does that. So saying all that to say, don't get turned off when they start asking you a lot of questions, because they're asking those questions for a reason. And they're asking those questions to protect you, because if they don't ask those questions in the beginning, and like a lot of these lenders, they'll just say, oh, what do you make? What do you think your credit is? Do you have a savings account? Okay, fine. And they give you a letter. And if they don't do their due diligence, and if they don't check those things, and you spend $500 on an appraisal and $500 on an inspection and $3,000, $4,000, $5,000, $10,000 on a deposit, and you get all the way, and you got your heart all set on this property, and you told your family and all your friends that you're going to closing, and you get all the way to closing, and you can't close on your house because a loan is jacked up, you're going to be upset. And that happens sometimes when a lender does not do their due diligence, when they don't ask those pertinent questions up front. So let them ask you those questions. Give them your information. That's the only way you're going to get a solid pre-approval. All right. So that's where you get it from and how the procedure goes. So what do you need to give them? Most lenders now have an electronic link they will send you that's going to ask for all the information they need to determine how much you qualify for, so that you can get your pre-approval letter. So in that link, they're going to ask for probably your last 2 paycheck stubs. If you have a copy of your last credit report, they're going to ask you for that, or you'll pay a credit report fee to get your, a new credit report pulled. They're going to ask for your employment information, because they have to do a verification of employment. They may even ask for your rental information. Well, they will ask for your rental information, because they have to make sure you don't have any late rental payments. They're going to ask for bank statements, because they need to see that you have the money to close, because you have to show that you have money in the bank to meet the down payment and closing costs requirement. They also kind of comb through your banking information to make sure they don't see a bunch of NSF fees and things like that. So there's a lot that they're going to ask for. It is okay to give them that information. They're licensed, bonded, they've taken all the certifications and all that, where you can trust them with your money, right? Or trust them with your information. So these lenders are not out to rob from you, all that kind of stuff. I had clients call me and say, they asked me for all my person. He asked me for my social. Yeah, they got to ask you for all that. You're borrowing a lot of money. So I'm sitting in the car, and it's nighttime, so I'm not going to take too much time. But that's pretty much the pre-approval letter. It's a letter that you need that tells us realtors and you how much home you're going to afford. And when you get your letter, it's only a 1-page letter. It'll have a congratulations thing on the top. It'll have your name, so that we know that letter is connected to you. It'll have what interest rate you're going to get and how much home you can purchase. It'll say 600,000, 800,000, 400,000, whatever you can purchase will be on there. And it will also say how much money you have to put down. All that information is going to be on there. Let me give you a little tip before I go in the house. They're going to give you a dollar amount that says you can afford this much home. Ask them 2 questions when you get that dollar amount. Ask them, what is the monthly payment going to be at this amount? So you might tell them, so they may say to you, at such and such $1,000, for this loan, your payment is going to be $2,500 a month. right? So at this amount of money, whether you're $300, $400, $5,000, whatever, you're going to be paying a note for this amount per month. Knowing that amount is very, very good information, but you need to ask them another question. What if you don't want to pay $2,500 a month? What if you want to stay at $2,000 a month? Or they tell you, okay, well, with the amount that you're approved for, your note is going to be $4,000 a month. Oh, that's great. You can afford something at $4,000 a month, but do you want to? Is the question. So let's just say, just for scenario's sake, that you're approved for whatever amount of, loan, and they say, okay, at that loan, you can, you're going to be paying around $4,000 a month. You can say, great, I can afford something at $4,000 a month. That's going to get you a real nice house, right? But you may say, well, I can afford $4,000 a month, but I kind of want to live a little more. I want to be able to travel. I want to be able to do this. I want to be able to do that. I want to only pay $3,500 a month. So then you got to go back to the lender and say, I want to pay $3,500 a month. In order for me to stay at $3,500 a month, what needs to be my cap? And they'll tell you, okay, well then don't go over a house at $300,000 or whatever it is. They'll tell you. So when you get your bulk dollar amount, when they tell you how much you can qualify for, make sure you ask them those two questions. Ask them, at this amount at my purchase power amount, at this amount that you said I qualify for, what is my monthly note going to be? And if you're okay with that, great. If you're not okay with that, and if you want to pay below that, ask them, look, this is what I want to pay per month within that number that you gave me. Where do I need to stop? What's my budget? Ask them that question. And if you forget, I got you, because that's always part of my consult. So you don't have to remember all that. A lot of times with the first call to the lender, I'll be on the phone with the buyer because I know the questions to ask, because they're like, I've never called a lender before. I don't know what to ask them. And that's understandable, because when I bought my first house, I didn't either, So if you want me on the phone when you do that first call with the lender, no problem. I got you. Val, thanks. Good info. Now get out that car. You are right. Thank you, my. See, that's what good big brothers are for. I'm out. Bye.